if you look at this short-term high here, right before this low formed, when this high is taken out right there on that candle, that's significant. Only if this run down here has traded into sell stops. It's got to be trading under some retail idea that would be viewed as support. The market dove into that liquidity, and you may or may not know that is a buy. You don't need to. You anticipate a shift in market structure. When the market rallies above, when does that happen? On this candle right here. Short-term high is taken here. We traded above it. It does not need to close above that. Okay, real important. Once that candle closes and this candle opens, you're going to monitor this candle, and you want to see as soon as this candle closes, does it create that fair value gap? The market trades down into that, takes off. See these down close candles? See that? That's all one continuous order block. What's it doing? It's inside that pool of liquidity, sell stops. Where's the open on that series of down close candles? Right here. That's the price level extended out in time. Boom. That's pretty neat, isn't it? Well, price starts to run where? Above the highs where buy stops will be here, above this high here, and above this high here. So the buy stops above here that was taken, this swing low forms once this candle closes. So this candle we're watching, does it go below that short-term low? It does. So now we have a shift in market structure that is now bearish, only because we've taken buy stops. Okay? Fair value gap forms, the market rallies up into that, you go short there. What are you looking for? Below here, sell stops. Below here, sell stops. Below here, sell stops, and in this fair value gap here. This is below the 50 level of this high and that low. Okay, so 50% level, that's what we're targeting. Now, let's go into a 1 minute chart and see how that looks a little bit different, but still has the same characteristics. Here's that same price structure, just on a 1 minute chart. See these two candles here? That's one consecutive bearish order block. The opening price, extended out in time. Why is this a good bearish order block? Because it has that gap. And it's taken liquidity. And there's a market structure shift. There's your high frequency, high power, high probability bearish order block. That's it. Okay? It's a change in the state of delivery. The market's being offered higher, 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 higher in these two up close candles. How did this series of up close candles begin? With this candle's opening right there. That opening, once this candle trades below it, that changes the state of delivery. So you go back to that point of reference right there. And that's why it's sensitive. The algorithm remembers that right there. Much in the same way, all of this movement down here, all these down close candles, the opening on that candle starts this series of delivery on the downside. When that opening price gets violated here, it changes its state of delivery. Now it was offering sell side. When it goes above that opening, now it's offering buy side. What will it be doing after that? It will be looking for buy stops, buy stops, buy stops, because it's offering buy side liquidity. That's what's happening. That's what the algorithm is doing. That's what the algorithm does, okay? It's going down from a premium market relative to this low and this high. 50% is here, that's equilibrium, so it's going to go down to a discount. And here's the lipstick on it on the 1 minute chart. This right here, these highs right here, is just staying below that low. It's building up more interest that this is what? Resistance. That is engineering liquidity. That way, when this runs above it, those individuals that know what you're learning today, they know that that's a pool of liquidity for buyers coming in at a high price. Why is that useful? Because smart money that bought down here or here, or here, or here, or here, that's where they sell to high-seeking buyers. So with that, you're looking at London highs and lows, 2 o'clock to 5 o'clock in the morning. That's your London session. What's the highs and lows of that session? Okay, that's important because the market's going to probably sweep above those highs or sweep below those lows. And the New York session is 7 o'clock in the morning to 10 o'clock in the morning, New York local time. Okay, what's the session high and low for that? And do the same thing for Asia. Okay, 7 p.m. to 9 p.m. And any intraday high and low forming right before the equities open at 9:30.